Welcome back to Venture Wisdom. This is the place we talk all things venture capital and private equity. I'm Rakesh Bhatia, your host, and today we are here to discuss the topic which is equally important both for the founders and the investors. And we'll be talking about what value do investors bring to their portfolio companies beyond just the capital. To discuss that, today we have with us Keshia Theobald van-Gent. And Keshia is vice president with BDev Ventures. BDev, as I understand, is a stage agnostic B2B software investor. I know Keshia for a while, and I know that there's a lot of value that they bring. But then instead of me talking about that, I would have Keshia talk about it. So thank you so much, Keshia. Welcome to the conversation today, and appreciate you taking time for us.
Yeah, thank you so much for having me. We have known each other for quite some time now, and I think you're fabulous. So I'm excited to be here.
Thank you so much. So yeah, Keshia, I know there's a lot that we can talk about the value beyond capital as a subject. But before we get into the subject at all, I would sincerely appreciate if you could talk a little about what is BDev, what you do at BDev for our listeners, and then we can jump straight into what we are here for.
Nice. Thank you for the opportunity to plug BDev. It's something I enjoy talking about all the time. So BDev Ventures, you hit the nail on the head. We are a B2B software investor. We generally invest between late seed and Series B. Our largest check to date is 3 million, but we are greenlit to go higher in some of those later rounds. We're a new fund. We've been around for about 3.5 years, really actively investing for the last 3. To date, we have over 53 investments, I think, as of this week. I haven't seen the paperwork come through, so we'll stick with 52. We are a pretty high volume investor. In addition to capital, we do focus on the US and LATAM, although we do have some global investments. But in addition to capital, we provide, and I think there's other things we provide, but our core kind of answer to a platforms team is a lead gen platform that we've created. So we provide that to all of our portfolio companies. It's really at the core of our thesis is we want to invest in companies where we can move the needle. And as a part of that, we actually run a pilot as a part of diligence so that we're really proving, certainly to the founders, but probably even more importantly to ourselves, that we can actually, if we invest in this company, we're going to really help them grow.
Awesome. I think that's exactly what we are here for, right? What value can an investor bring to the table? Everybody can bring the money, not a big deal. That's what the VCs are primarily for. But then we'll come back to what you and BDev are doing with both the lead gen and other pieces that you bring to the table. Generally, if we talk about the investment market today, particularly for the early stage investors, and you have been between seed to Series B, as you said. So I would assume out of this 52, a large number would be early stage startups. What do you see as a general trend that has evolved in the VC market that investors are doing? Because I see that almost, I would not almost all, but yeah, a very large number are building something called the platforms teams within the VC. They claim several things, everything between opening the doors to helping with the digital marketing, to SEOs, to secretarial services, to the accounting services, to whatnot. So what is that change in the trend that you are seeing in the investment market today?
Absolutely. I actually got started in venture on the platform side. So because I come from an operator's background, I think that this is not necessarily a new trend. This has probably been happening for the last 10 years or so. But it is continuing to happen despite even some headwinds, despite, we've heard there've been these big articles released every other year, something big happens and it's like, our platforms team's worth it. But the statistics show that they are. So I think a lot of funds today the reality is that great deals are hard to get into. Unless you are Sequoia or one of, 10 funds, it's tough. And so being able, I mean, we give this advice to startups, right? But on the venture side as well, being able to differentiate yourself not only helps us get into great deals and work with the best founders, but it also helps us raise money. We raise money from LPs just like founders raise money from VCs. So I think it's important on both sides, but it's also been proven over time to produce better outcomes for the startups that we invest in. One of the things that I worked in sales once. It was a really bad fit for me. I was very bad at it. But one of the things I genuinely love about venture is your success is my success, right? If I'm investing in a startup, we are fully incentivized to support them however we can and help them be successful.
Yeah. So I think it's while everybody may claim that they are doing it for their startups, the ultimate cascading effect goes down to the fund returns itself. A successful startup would result into a successful exit. So I understand. I think that makes sense, even for the VCs and further to the LPs. And obviously, when you are raising more money, the past success, it matters.
Yeah, and even for first-time for first-time fundraisers, if you are an emerging manager in venture and you're going out to LPs for the first time, you probably have a track record. You've probably been an investor at someone else's fund. But even then, going out and saying like, hey, I'm going to be awesome. I'm going to invest in startups. Okay. But being able to say, hey, this is how I'm adding value. This is what is going to give my companies, my portfolio a competitive edge, I think is meaningful.
And what do you see are the most prominent value adds that the VCs are bringing to the table today?
That's a really interesting question. And it used to be hiring. Hiring used to be in maybe not the number one, but it was the thing that we heard about the most was like, I can help you by making some introductions and I can help you hire. Because talent shortage, engineering shortages have always been a major issue in Silicon Valley. I am actually not hearing quite as much of that in the last year or so. And I think we all know why. Hiring has become a little different. A lot of big tech has gone through a few rounds of layoffs at this point, which means the hiring market's actually pretty good. But what we are hearing more and more of is I can help you with GPUs. I can help you get access to the resources that you need to be successful, and specifically leaning more into the resources that are constrained. So it used to be hiring. Now maybe it's even, you can use some proprietary AI technology. I've was recently pitched on that by an emerging manager, which I think is a really interesting idea. But definitely the bigger funds, and especially the kind of brand name funds, if you will, the Sequoias and Andreessens. Andreessen is known for having a massive platforms team. And I think quite a few funds have followed in their footsteps, and they will support with a wide variety of things. The one thing founders should be thoughtful of is, if you're looking for additional support from a venture fund, and you should be, like, if you're raising capital, venture capital is very expensive. And it only works with a very specific model of company, right? Like you really have to go after hyperscale for venture funding to make sense for you. Otherwise, you're too diluted. Like at the end of the day, you would have been better off as a founder, maybe just having a lifestyle business. So it's a specific type of company that we want to invest in where that model is going to make the most sense. But the truth is, if you're not getting something out of your venture, backers, if you're not getting something out of your investors beyond just capital, they're probably not the right fit for you. Now, I caveat that by saying, if the company is doing really well, you're going to get more attention. If the company is not doing as well, but maybe just hitting a slump, you might get some immediate attention if you can, get that and really take it off. I think that you're good. But that is something I think founders also find themselves, is that when the support isn't systematic, it can be that only the best companies get the most attention.
So, are you saying that it's not, while the trend may have started by the VCs, what I'm hearing is that even the founders themselves are becoming more and more aware of what they should be looking as a value from the backers?
I think so. I hope so. Especially since we, in very kind of recent memory, had a period where startups where, I mean, this is canon at this point, right? But startups raised these big rounds at high valuations. That's kind of what the market was dictating. And then as market conditions, kind of macro economic conditions changed, the venture market changes, all of a sudden that next round that they were really counting on from their investors, from new investors, just wasn't there. And so that has created a really big shift where startups today are raising less money and less often. We are looking at, and I think this is true across the board. I think this is still very much so the narrative that, what's your path to profitability is now a part of that conversation. Whereas in 2021, like, I don't think anybody was, I don't think anybody was realistically having that conversation. And people were getting funded without a realistic path to profitability. Now, and there's industry differences there, right? If you're in deep tech or you're developing a new drug, obviously that's a very different conversation and expected timeline. For a B2B SaaS company, you should probably be thinking about what does profitability look like? And I think now that that's more a part of the conversation and startups are raising less often, that's still true today. And I, like everyone, I hope that's less true as the year goes on. I hope we get out of that slump a bit. But yeah, I think founders, there's less deals and it's more competitive for VCs. VCs are sitting on a lot of dry powder, and I hope that we see more investment this year than we've seen in the last couple of years, although it has kind of been eking up. It's definitely going in the right direction. But yeah, I think founders should and are expecting more from VCs.
Interesting. So, with that, I would love to hear what is it that you and BDev are doing to bring that value. You gave a quick cue of what you are doing when we started the conversation, but keen to
Yeah.
understand more in detail on what you do, how you do, and yeah, of course, if you have any examples, I'm sure would love to hear that.
Yeah. So we do, I hope we do a lot. And one of the things that kind of centered and what we talk about most is this lead gen platform. It's an internal product. We only use it with our own ecosystem. It's not pretty to be on, it's not a beautiful SaaS product that we're like, here's a login, let us know how it goes in a year. Quite the opposite. It's really hands-on with our team. And it's essentially we have a database of several million proprietary leads, I think about 300 million. And we have trained a machine learning bot and obviously utilizing AI more and more that kind of goes in. We feed it a lot of information about the company and the ICP, and it goes in and finds the right connections at the right cadence, tailors the message to that individual, and then sends that out. So in kind of phase one, it really is cold email outreach.
This you are saying you do it even before you invest?
We do this before we invest. Yeah.
Okay.
And
So you're actually bringing that value before you actually go ahead and invest in the companies.
we will prove to you before we invest that we will be great partners.
Well, I made that statement for the listeners, but I know people. I have heard that it delivers. So, and I must congratulate you for that. And people who are listening to this do know what she's saying it means, and I know about it.
We make up for our portfolio today, and this is actually we are working on new numbers here. So if you see them different from me in a week, fair enough, because we're doing our big end of year, gathering all the information and checking these numbers again. But I can tell you the last time we did that exercise was in summer of 2024, and we make up, based on those numbers, somewhere between 7 and 65% of all new revenue for our portfolio companies. So it
And
is
that's ongoing, or that's like it's in first 6 months, first 1 year, first 2 years, or it's like
ongoing.
ongoing.
It's
Awesome.
ongoing. As long as they're on the platform, that is what we're expecting.
So
Now, there's a big difference.
70% of the lead gen that a startup gets is with your support.
between 7 and 65. 7 is still.
So basically, you're making up for making up the portfolio and the investment value appreciation for all the investors who have come on board. So
That's
they should
right.
actually be
And
tagging along just because you are there.
that's right. Now, we do get, this is baked into the terms a little bit. So it's definitely, we're trying to, like every investor, kind of punch above our weight class, if you will, get into bigger deals, better deals, work with the best founders. And this is kind of our in that, like, hey, we're helping you, and we're helping you in a way that's systematic. And we're proving that before we work together. But like most VCs, and we're a minority investor, so we don't lead rounds, which also means that we're very happy to try to help you, make introductions to other investors, try to help connect you to the right people who can fill out that round for you. And I think, like all investors, that's something that we're doing, right? We're making introductions, we're trying to be supportive where we can. We're trying to hop on a monthly call. That's probably a bigger cadence than most investors. But the reality is that's really hard. And it also depends on, do I have the right contact at the right time? Did you think about asking me? Am I trying to chase you down and like, hey, what do you need? Or are you coming to me and saying, as a founder, coming to me and saying, hey, this is what I need. Can you help me with it? So I think for us, being able to provide that value systematically and before we invest is huge.
Very cool. So if I have to look at it at a very high level, just from the value perspective that a founder or any startup may generally be looking for, I would say probably 4 or 5 different things that come to the top of my mind. More business, access to money, access to customers, better operations and governance. Right. So you say you help with the first 2 that I stated already, right? So access to the more to the business, access to more money, investors. How about the other pieces of operating support, anything on the governance? Because being minority, my assumption is you don't take the board seats. So
We do not.
anything on those aspects?
Um, honest opinion here, I think governance, no, we don't generally help. We take the stance like, hey, we're minority investors. If there's a specific thing that you want to talk about, we all have operator background. I was a founder myself. Nacho DeMarco is our managing partner and founded the company BDev, which is wildly successful. So we have a lot of like a depth of knowledge there that we can pull on. But it's not something that we actively put in front of founders necessarily. If it kind of comes up organically, we'll talk about it. But in large part, we have created the playbooks like everyone else. I don't think anyone read them. I don't even know that everybody on our team read them. And that's, I'm going to get in trouble for saying this, but I think it's true that, how you deliver, founders are busy. You're a founder. I mean, how often do you have time to sit down and read through something that may or may not be relevant to you today? It's just not realistic. And so we're trying to, in the ways
the rules of the game change every day.
Yes. And so in the ways where we're like, we're trying to be systematic in how we add value, at least the value that we talk about.
But what you do it best, as I hear it.
Thank you.
Not everybody is one. Not everybody wants to do everything. And then not everybody finds their fit at doing everything. Right. So you have your fit, and you do it well, as I hear.
Yes. And actually, one of the things I genuinely love about the model, because we're doing this up front, my hope is always that even if we don't invest, like, you still get some good leads, hopefully learn something about the messaging. We're doing a lot of like rapid A/B testing. And of course, like I'm also, I spend way too much time on my phone and respond to basically everything. So I'm also, we have a company in diligence. We're super available during that time too. So we really are trying to be good shepherds of the community, I guess, right? Trying to really be a part of the community, not just kind of sitting behind closed doors. like I said, we're pretty high volume investors. I mean, we're not, at one point, I think Tiger was making hundreds of investments or tens of investments a month. We're not quite at that stage yet, but we are making 5+ investments each month. And I'm super proud of that. So we have a strong team, and our process isn't short, right? Because we have this essentially pilot of this platform.
Yeah.
Our diligence process, that is kind of the one caveat to all of this, is like our diligence timeline can be a giant pain in the butt. So if you're a founder and you're listening to this and you're like, hey, that sounds really interesting, maybe in a few months I'll be thinking about raising, I'll reach out now. We actually do respond, the info at email, we respond to every single one.
info@BDevVentures.com. Now, if we further go back to very earlier part of the conversation where we started, you said that the founders are also looking for more and more support beyond capital from their investors. Now, in case of BDev, it's evident you bring that value and you talk about it even before you invest. But if a founder is now looking for raising their current raise or next raise or whatever it is, most investors do not bring that value early on. It's always after the investment. So how do they really find out which is that investor that they should look at? What are those signs? Should they look around? Who should they ask whether there's a real value beyond the capital that the investor is bringing?
Thank you for asking that question. And this is something that you and I have talked about before. So I feel pretty strongly about this. If you would not, an investor is a marriage. In fact, it's maybe longer than some marriages in the US, right? Like this is a long-term relationship. You are often, not always, but oftentimes giving this person a board seat. You are making them a part of your company. And I've been a founder, you're a founder. That's like, I mean, it's your baby, right? Like this is not a decision that should be taken lightly. And I think the one thing I don't see enough founders doing is getting a reference check. Now,
Mm-hmm.
here's often what will happen. I say that, and I mean something pretty specific. So oftentimes I will have founders, we'll have one call, kind of an intro call, and I say, amazing, like, send me some more information. I'd love to dig in a little bit more. And it's like, well, I'm not sending anything until I have a reference. I'm not going to introduce you to someone after a first call. I have a lot of first calls. That's the reality, right? Is
Yeah.
there's a time and a place where I would be willing to do that. However, this would be true if I'm hiring a very senior team leader or team member, I'm not just going to ask them for the 3 people that they know are going to say nice things about them. I'm going to see who we're connected. Do we share connections? And I'm going to reach out to the people that I know that also know them and say, hey, what do you think about them? What do you think about this? Like, what do you hear about this? Is it good? Is it not good? They're telling me they're going to help me with X, Y, and Z. Have they ever helped you with that? I don't think there's a fund out there that doesn't have every single portfolio company listed on their website.
But do you see any apprehension coming in from the founders? They may feel that they may be it may be sensitive sometimes that they are reaching out to portfolio without asking the investors. We don't know how they would react and so on. So what do you think about that?
I think if you have the option, especially if you have the option between different investors, do a reference check.
So yeah, ref check is one. Anything else? Any other way to look at that? Go Google or
Yeah, ask.
ChatGPT or Perplexity now?
I've definitely, worth asking ChatGPT to pull together, what is the general sentiment of this investor, of this fund, but talk to the investor. Like, hey, how do you help me? How do you work with companies today? I think sometimes there is such a power dynamic between investor and founder. And unfortunately that you and I are not going to change that here on this call. But I think it's really important and powerful for founders to walk into that conversation and make sure, this is it's very similar to like hiring someone, right? Like when you walk in, you're not just asking, it's a very powerful position to when you're having an interview for your new job, not just, okay, yeah, and like, you tell, like, I'm going to tell you everything that I can do and I'm great and you should hire me, but also, sorry, what is the pay? How do you support your employees? It's it's a very similar conversation. Hey, we're super excited to work with you, but I want to understand, how do you work with your founders? And is that across the board? If you're making introductions, how often should I call you? How often are you talking to your founders? Those types of questions I think can be really helpful. And I genuinely don't get them very often. You'd be surprised at the number of companies that I talk to and the few founders that really ask, hey, now some of that might also be because we run a pilot, so it's pretty clear maybe how we're adding value. But I think it's important, and I think it's something that a lot of people forget.
Makes sense. So yeah, so now I think I have clearly seen that shift happening, not just in Valley, but across the board. We work with investors in my other part of the life outside of podcast, where we work with investors in so many of the countries, and I do see that shift happening where not just investors, but founders themselves are becoming more and more forthcoming in asking, what is it that you bring to the table? I can understand there are times when you are desperate about the money. You say, okay, get me the money. It's not just desperation, probably sometimes that is the only thing that you need. Most of the other things are figured out. It's not true 100% of the times, but there are times when founders have other things figured out. It's the capital that they are looking for, mostly towards the growth stage, I would say, if not the early stage. So yeah, no, I think what you said makes a lot of sense. So what you say, talk to the investors, get the references, go get the sentiment analysis, whatever you can on the net. Anything else other than that?
I think you know what? I think if you're doing that, you're probably already ahead of the curve.
Great conversation. I sincerely appreciate you bringing your thoughts, your experience, and highlighting the value that you bring to the table as a firm yourselves, and what generally you see is happening in the ecosystem. So I appreciate again you taking time for us today, and thoroughly enjoyed this conversation. As I said, we'll sit over a cup of coffee some days soon and perhaps chat about this more.
I would love that. Thank you so much for having me. And anytime. Yeah, you're, like I said, you're fabulous. And I always enjoy our conversations. So thank you.
Thank you so much.